What is up everybody, Gifford here, and excuse the hat here, but today what we're going to do is we're going to go over two stocks that I'm buying right now. So getting straight into it, the first stock is Tesla stock, ticker symbol TSLA. So let's start off with a Tesla stock chart, and we can see that the year to date, that Tesla has actually been down pretty heavily at minus 41%. And if we have a look at over the year, we can see it's been a pretty bumpy ride from Tesla. It was hovering around about the $600 mark, and we can see that it's had three peaks, and it's pretty hard for it to get over the $1,200 mark. And since April, the correction has really started happening with all the stock market actually declining. It's now come down quite a decent amount. But what I'm really excited about is this figure right here, where the PE ratio is actually now at 95. The other thing that's quite a big distraction for Tesla stock as well is all about Elon Musk and how he's buying Twitter. Now, no doubt that this has negatively impacted Tesla stock, but there's also been the general market downtrend as well. But this stuff here hasn't really done it any favors. But with that said, Tesla stock is also highly volatile, so you do get these big massive swings. And when the general market is selling off, then obviously it's going to go down as well. So why am I buying this stock? Well, basically I think that even though it is overvalued, there is a lot of value here to buy it now. It's even cheaper, and now the company has progressed a year later from when I started buying it. Also, in the last video I explained of how I'm going to buy an average down as the stock falls. To me, the main thing is that the company fundamentals remain the same, even though it is pretty expensive price for it, but you are paying a premium because it's obviously Tesla stock. But they also have two new factories online, which is the main driver for me, which is producing more cars. So we're over here at Hypercharts, and this just really shows you that the deliveries of the Tesla cars has been increasing. There's been a couple of flat lines across some of the quarters, but generally it's in a big uptrend. And if we change that to annual and take a longer term view of Tesla, you can see that this here is just massive growth, and one of the biggest catalysts for that growth is obviously their Model 3. And when I said before about how their factories are coming online, their Shanghai factory isn't producing as much because of the lockdowns. What we know is that Model Y is now trying to ramp up into those other factories as well when they finally get going. And I know that the market cap is really high for a automotive company. I don't think people realize how fast Tesla is actually growing. So the other thing I haven't noted down here is that the company is going to vote on to have another stock split. So that is the reason why, as well as the share price going down, and I think it's a discount at the moment, I also want to do some options in it. So this is going to be an opportunity for me to do some options. The price now is around about $700. So if I was to do options right now, I would need $70,000 because it's multiplied by 100. If they have a stock split of 10, then obviously the share price would only be $70, and then you multiply that by 100. So therefore it's $7,000 per contract, and I can afford that if I was to sell out of my other positions. So that could be a possibility. And if they stock split into 20, then it would only be $3,500 for me to do another contract, and I'd be quite familiar with it as well. And I know it does have a couple of swings here and there, but fundamentally the company is still very good, and I'm very bullish on them long term. So the second company I've been buying little bits of is Google stock, ticker symbol GOOGL. So before we look at the stock chart, one of the biggest drivers for me buying Google is that their PE ratio is around about 20, which I think is really cheap. They're also down by about 25% because of the recent market downtrend. And for a $1 trillion company, down by about 25% is quite a big margin. And also Google is a solid high revenue company, and the solid growth at 14% is still pretty good because they're such a big massive company. So 14%, even though it's not like growth stocks, you do get some stability and the fact that they're actually still growing. So there's a lot of things to like about Google. So just having a look at the stock chart, if we just go year to date, we can see that they're significantly down by 25.66%. And over here at 1.42 trillion market cap, we can see that the PE ratio is at 19.5. So having a look at this chart here, so this chart is total enterprise value divided by the revenue. And before I explain this, let's just have a look what the definition is on here. So the definition reads, the enterprise value to revenue multiplier is a measure of the value of the stock that the company that compares a company's enterprise value to its revenue. So EV divided by R is one of several fundamental indicators that investors use to determine whether a stock is fairly priced. So basically clicking down here, what is a good enterprise value to revenue ratio? And it's saying between 1 and 3. So a lower EV value to revenue is really good. So if we come back to the chart here, we can see that right now Google has a enterprise to revenue value by 4.26. So while this isn't between 1 or 3, 4.26 is really good. So while we look at the few years, we can see that 4.26 is actually a good value, because a lot of the time on this chart here, except for the big dip, it's been over 4.26. So if we can see the lowest point of where we had the big March crash is that it got down to about 3.34. So it's very good value right now. And the main reason I choose Google is because I think it's the cheapest out of all the large cap stocks, and I really wanted to buy some large cap stocks as well. So we can see here that Apple is the highest at $2.3 trillion, followed by Microsoft at $1.98 trillion, and then we have Google at $1.42 trillion, and then Amazon at $1.1 trillion. So if we go back into Ticker Terminal, we can see that here on the Apple chart, and we get Apple's enterprise value to revenue, we can see that they are 5.48, and obviously this is higher than Google's ratio, but we can also see that in the March crash they got down as low as 3, and it's pretty much the price of it is almost double here. So again, the value isn't very good. If I was wanting to buy Apple, I'd want to see this value go down a lot. Again, if we look at Microsoft, we can see that here their enterprise to revenue value is 8.81, so it's higher than again, and they only ever dropped to about 6.65. Pretty rich valued still for this company, and that's why I'm choosing Google. And one of my main drivers for buying Google is that they are also doing a stock split, but this one is confirmed, so it's a 20-to-1 stock split, which means it's going to bring their share price down quite a bit, and therefore I'll be able to do options in it. So just in summary, those two companies are going to be the ones that I am buying. Again, let's have a look at Tesla. The company is growing its car deliveries, its EPS and revenue is also increasing. So there's big points for me, because EPS and revenue is what the analysts look for. And no doubt the current share price is regarded as still being rich, even though it's come down by so much. We're still paying a lot of future value into this because their PE is at 95, and remember that value stocks are regarded as good buying at 10. So this one is almost 10 times that. So you really have to buy into Tesla's future if you are an investor. And with Google, the main summary is that we like Google because they are a large cap and they're fairly safe because of how big they are, and they have solid revenue. So the other stocks have been absolutely hammered, the growth stocks. So what we're trying to do is I'm trying to focus into revenue generating large companies, because they're not going to go down as much in a bear market. So I have two other companies which are pretty high risk, and I'm happy to have that. I've really found some comfort in buying some Google to try to get a bit of stability, and I just want to get my position up so that Google has a higher weighting in my portfolio. Anyway, those are my two stocks to buy. Thank you very much for watching. As always, give the video a like if you liked it, and if you want to follow my investing journey, feel free to subscribe. I also do property investing videos and personal finance videos, so there's always that. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. If you want to hear more from me, you can also follow me on Instagram. I have an account over there, and I post there every second day or so, so if you want to hear from me more, don't forget to follow. Otherwise, that's it for me, and I will see you in the next video. Goodbye.